How do we get from like 40 and 50 down to, call it 10 years? There's 4 big levers that you need to know about. And this thing can explode in growth. You're gonna have that freedom a lot sooner if you're willing to go this path. Hi, my name is Morgan Whalen. I'm a fractional CFO, and I've been passionate about finances ever since I was 15, 16 years old. And so I'm gonna share with you today the fastest methods I've seen in order to condense the wealth creation process so you can get to where you wanna go a lot quicker. Generally, when people are looking to build wealth or make generational wealth, the first thing that they're trying to do is have their passive income exceed their expenses. Because once their passive income exceeds expenses, now everything becomes a choice. You don't have to take the job or do the thing if you don't want to because you don't need the money technically anymore. And so it creates a lot more freedom in your life if you have that ability to say yes or no to things without the demand of having to need cash. If that's the case, the real question is, how can we generate more passive income quicker? And I'm going to focus on this side a little bit more rather than the expenses because I feel like most people somewhat already understand the expense side of things. Don't spend on coffee, try not to eat out as much, try to travel less, live in lower cost areas, share a house or a rent with someone else if you can, right? Like look for ways to cut your expenses as much as possible. Now, the other side is how do we increase our passive income? Well, typically, in order to increase passive income, you first have to increase your active income. And so your active income is the money that you get from your job. So think as an independent contractor, a worker, W-2, you're trading time for money in a business. So when they're looking at this, they're gonna have their income. And the general rule of thumb is, right, if this bar is your whole income, you would take a sliver, 10%, and then you would invest it over into assets. And then those assets over time will help build up your passive income for you to live off of. So think real estate, you could do rental income, think stocks that you can get dividends from, meaning the company makes a profit and they give a part of those profits back to the shareholders or the owners. You could do it in bonds to where when they mature after a year, 5 years, 10 years, whatever the time frame is on it, then you get the interest and then you can either roll it into another bond and or just take the money and move it into a different asset class altogether. But there's many, many different assets that you can invest into with the idea of, I'm gonna use this money now to get more later on. You're gonna get a return or an ROI, return on investment. And so there's this good graph that shows the risk level and the ROI. In general, the more risk you're willing to take on, the higher ROI you can get. And so down here towards the bottom would be bonds. And so it'd be government bonds first because they're less likely to default on those. And then corporate bonds, and then after that, you probably get into real estate, and then after that, stocks, and you keep on going down the line. And if you want to consider crypto an asset class, then it'd be like all the way out here on the asset curve. With more risk, though, you are able to get a better return on investment. That's why in crypto, it could double or triple, but there's way more risk because it can also go to zero just as likely. Go farther out in the risk curve, more chance for a return, but then there's also a greater chance for it to lose you money as well. And so you're looking for ways to, how can I invest into assets that fit my risk profile, but then also generate the highest return for me so then that way I can start increasing my passive income that I'm gonna get and so I can then retire. So what most people do, like I said, they have an income, they have a job, they take 10%, maybe 15 or 5, somewhere in there, and then they start investing it into assets. That's about 50% of people. Now 50% aren't even to that level yet. So we'll talk about how do we get you to that level to where you can get that 10% extra in your income. But even if you are investing 10%, it's going to take somewhere between 40 to 50 years to get to the point where you can retire safely and then start pulling from the accumulated asset value to sustain your lifestyle. And so if you want to condense that even more, then I'm going to talk to you about how we can do that. First, if you do have a job, so then you need to be able to generate more money. That's the first thing you need to be able to do, right? And again, I'm not going to cover the expense side as much, but always look at your expenses too. You can find things in there that may be a nice to have, but not a need to have. So how do we increase how much our take home pay is from a job? Well, the one and the most easiest off the bat is just to do more. If you work 40 hours a week, see if you can do 60 hours a week. Now you just increased your take-home pay by 50%. Now you have the wiggle room, that 50%, to put some into your assets that you're going to be investing in. The other thing you could do, if you can't do any more, you're tapped out for whatever it is, then what you can also look at is to increase your skills. So Elon Musk says this, but he says, you get paid in proportion to the level of difficulty of the problems that you solve. Which means if you know how to solve harder problems, then you're going to get paid more because less people know how to solve the difficult problems. So think about it like supply and demand. A lot of demand for something, but there's barely of it available, like there's low supply, then that means the price is going to go up. It's the same thing with you as a person. If you have a set of skills that not a lot of people have and there's a high demand for that thing, then you're naturally going to get paid more over time. So you can look at this in the different career fields. Some career fields pay more than others. Well, it's typically because it's a higher skill set, they solve higher problems, and so they're going to get paid more as a result. So you can upgrade your skills. So if you invest in yourself, you can upgrade your skills and then be able to command more. So the other thing that you can do is switch industries. I would suggest going into a big growth industry. And technology has been that way for the last like 20, 25 years of it's constantly expanding. Same thing as healthcare, right? If you pick an industry that continues to expand, you're going to have more opportunities because the business that you're in is going to naturally grow more. And so then there's going to be more roles that open up for you to be able to then increase your salary as you get more responsibility. So it could be that you just need to switch your industries. That could be kind of hard to get into, but if you can, that's a great way to level up how much you're getting paid. Another thing that you can do is job hop. So if you're like, I can't leave the industry that I'm in, well then typically what happens is after 2 years of being in a business, they are underpaying you for the value that you bring because you've learned a new set of skills. You're now able to do their process. And so now you're producing more in value than it's costing the company to employ you. There's a gap there. Maybe after 2 years or 3 years, you look to see on the open market, right? If other people are hiring for a similar job or position that you're doing right now to see what the pay is. So then that way you can go back and say, hey, actually, other people are getting paid $10,000 more than what you're paying me. Do you want to match that? If not, I have a job opportunity over here. If you are, hurting for cash, then job hopping every 2 to 3 years may be a good way to increase your salary. The last one I'll say here is to go into something that's more performance-based. Performance-based typically means you're going to get a bonus or a commission based on your specific results. So think of salespeople. It's the easiest analogy to use here. If you sell more, you're going to get more in commission. And so it's literally directly applicable to how good your skills are is how much money you make. And the best salesmen or women out there can make 500,000, a million, even more a year. So if you can switch to a performance-based type job where you're getting paid based off the outcomes you can get for the company, and you're really good at what you do, the sky's the limit on what you can make. You want to be able to kind of remove that ceiling that comes into place when you trade your hours for money in a normal salary job. If you have no upside, no commission, then you're really capping the ability that you have to make more money or to generate more money for yourself. If you're making money and now you have that 10% going into assets, that's great. But now you're still on that 40 to 50 year time horizon to be able to say no to things you don't want to or yes to things that you want to do. So how do we get from like 40 and 50 down to call it 10 years? How do we get that and condense it? Well, there's 4 big levers that you need to know about. So outside of time, time is the one that we've just been talking about. When you stay in a job and you work on a skill set, you're using time to get better at what you're doing. When you're investing into assets and they grow over time, you're using time as a way to compound the value of the asset. These 4 are outside of time, but they're the highest leverage things that you can do. And so number 1 is using other people's time. So if you're a business owner, you can hire someone, call it for $100,000. And if they can generate in revenue $200,000 for the business, you as the business owner get that spread between the $100,000 that you pay them and the $200,000 that they bring in. You multiply that over multiple people, 10, 20, 50, 100, that's a lot of profit. And if you're the only business owner, you're the one who gets all the profit if you want to take that. The second one, other people's money. So think banks, think insurance, think venture capital. They are using other people's money to generate money for themselves. So if we take the example of a bank, the bank borrows from the Federal Reserve at a certain interest rate. And then they turn around, they go to business owners, they go to homeowners and families and say, you can borrow this money and it's going to cost you this much in interest. And so they make the spread or the difference between how much they're charging you in interest and how much they got it to borrow the money from. So that spread, it doesn't sound like a lot. It may be a few percent of interest, but if you times that times $1 billion or hundreds of millions of dollars, that's a lot of money that they're making. So they do that and they're huge, right? Some of the biggest businesses in the world are still banks. Another big form of this is like, think Warren Buffett. So Warren Buffett takes people's money, right? So just the average Joe investor's money, and then he goes out and says, these are the winners. I'm going to put my money on these companies like an Apple or like a Coca-Cola. And then he brings in that money every so often and then redistributes some of that money or makes other investments. So the whole thing is he's leveraging other people's money to make decisions on how to invest. And then as the whole pie grows, the investor's piece of the pie grows too. The third one is content. And so now we're getting more into levers that everyone can use. So the first two are typically reserved more for businesses. The third and the fourth could be really by anyone if they want to. And so content, think radio first, where you could send out a broadcast and thousands of people can listen to it. Then TV, now it's social media, live streaming, podcast, but there's all these different ways in which you can make content. You make it once and it can be seen by 1,000, 10,000, 100,000 people. So that in and of itself is valuable. People's attention is the new currency. So even if you don't have a product that you could sell or a service that you could sell, if you grow a big enough following, then businesses will come to you and say, hey, can we partner with you? We'll pay you X number of dollars if you promote our brand or our product, or you can shout it out in whatever it is that you're doing. And the last one is technology. And technology is, think software, think apps, think information that can be bottled in a digital form. But essentially you build it once, again, same concept. You build it once, it can be used by thousands, millions of people. If you look at the businesses that are the biggest right now, a lot of them are tech enabled or just primarily technology companies, because that is the most efficient form of a business model that can generate the most money and keep the most in cash at the end, because it's taking less labor dollars. They have less expense to generate the revenue that they have. And so these are the most valuable companies in the world because they're the best at producing profit. And so then they reinvest those profits into new products, R&D, whatever it may be, but they're just printing machines because it doesn't cost that much to serve an additional client or customer because they're selling them a software. Technology works, and another version of this is like if you have a book, if you have a course, if you have something that you bottle up into a digital format, theoretically, the only thing that matters is how many people you can get to buy it, because there's no extra cost of delivery once you sell it to them. Like there's no additional labor costs involved, and there's no additional technology cost for most of the times when you sell it. So that's another way where you can leverage technology to sell to a lot of people. Building something, there's now vibe coding. You can build something that helps solve a little micro problem. You could do it over a weekend or a week, and then thousands of people can adopt it. So really, really quickly, you can put in just a little bit of effort, concentrated effort to focus and solve a specific problem, help a lot of people, and then you get $3 a month, $10 a month from them. That adds up really quickly. Again, how do we increase how much income we are able to bring in for us? That's the question here. So these are the four biggest levers that you can use to generate more money for yourself. And so the cool thing, if you decide to go down the business owner route and you just, you don't want to do just the job, but you're like, oh, I kind of want to get into this business ownership thing. So if you're just looking at it from this angle, you have the job, 10%. The 10% goes into the assets. Again, this is the 40 to 50 year version. So then how do you accelerate this? Well, then you also have this other bar here. When you're a business owner, it's called profit. And so you could take all that profit and you could put it into your business. And guess what? If you use it correctly, now you're using, social media. Now you're using other technology. Now you're using other people's time, and you're able to leverage 2, 3, 4 of the biggest levers that are out there to generate more money. And the cool thing is like when you reinvest the profits into your business and when you're using these levers, these high leveraged ways to generate more wealth or create more value for people, what ends up happening is, let's say you have, $100,000 in profit. Well, is that valuable to if you ever decide to sell it? Maybe not too much. You might be able to get, 1 to 3 times that. So you might be able to sell your business for $300,000. But if you continue to work on it over 5 years, 10 years, and you get a business, let's say that does, 1 million in profit, well, now that is worth, could be, depending on the business that you have, 10 times, 20 times that. So you could build a business that has $1 million in profit, but then it's really worth $10 million or $20 million, and it has a large part to do with what levers you're using. The more levers that you have, those bigger technology and social media content and other people's time, like the more you're using those, the higher the multiple goes typically. You're not just building this 10% into an asset, you're doing profits into a second asset class over here. This is your second asset. And this thing can explode in growth because, again, you're leveraging other people, you're leveraging better financing terms, you're leveraging content sometimes or technology to build an asset that typically solves harder problems for other businesses or for people, or you're solving problems that scale for people. And so you're able to generate a lot more money. So the quickest way to wealth creation is one, doing a business, and two, trying to incorporate as many of the levers as possible so you can condense the 40 to 50 years it takes down into maybe 5 to 10 years. That way you can steal back your time a lot quicker and then decide earlier on in your life, do I want to do this? Do I not want to do this? Like, you're going to have that freedom a lot sooner if you're willing to go this path. Now, starting a business is risky. On the risk curve that I drew out earlier, it's probably halfway between a stock and crypto on the risk curve, right? It's definitely more riskier than investing into stocks, but it's not as risky as investing into crypto. But in reality, within 5 years, 50% of businesses go out of business. So you have to know what you're doing. But I also think, this is my belief here, that it's never been easier to start and grow a business. You have technology, you have YouTube videos that show you step by step how to do things. You have whatever way you want to take it. There's someone that's already gone that path before and can show you all the steps. It doesn't cost as much to start a business now. Back in the day, if you wanted to start a business, it had to be brick and mortar, meaning a physical location. You had to buy all this inventory, you had to buy all these assets. Now you literally just have a laptop, an idea, and then you plug and play and you start building your website, you start building your online presence, you start selling if you want to do that. So it really becomes more about taking the time, the discipline to learn the skills that are required to sell and then build and deliver a good product. If you could do that, everything else becomes a lot easier, and you're using, again, the best model, which is the business, to grow your income to where you can get to that point where you have financial freedom in your life and ultimately however much wealth you want to generate, because the biggest businesses can do billions and trillions of dollars. So the sky is the limit on how much you can grow this business. So hopefully that's helpful. Hopefully that gives you a little bit of insight into how to generate wealth. There's nothing wrong with doing it the way that I laid out at first with a job. It's just understanding how, if you're going to stay in a job because you don't want to take on the risk of being a business owner, totally fine. It's just, how can I maximize my time there, or how can I switch to a performance base so I can generate more money for the time I'm putting in, so I can get to that next point that I'm wanting to get to quicker. So hopefully that was helpful. Hopefully you took something away from here. Let me know down in the comments below what stood out to you the most. So that's all for this one. Have a great day. Don't forget to hit a like and subscribe.